What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover an iron condor. All right, so we had a little bit of a sell-off in the markets here. NASDAQ and the E-minis right now, basically unchanged. We've had some two-sided action today and certainly over in the overnight session. But you can see here on Tuesday, big move in the E-minis, 100 points-ish to the downside. NASDAQ was down a couple hundred and has fallen back to kind of the middle of where it's been trading. For me, I think it's an interesting time, especially because I have so few positions on, to put on a little bit wider core sort of position here in this Johnny Trader portfolio. With this pop in volatility, we can see volatility futures currently hovering around 19. They have come in slightly here, but you can see we got a nice pop in volatility. So for me, I'm going to look at either the Qs or SPY. I think because I did the Qs on the SPY on the last trade, I think I'm going to go to the Qs instead just to do a little bit something different here. So I'm going to go to the October expiration, 44 days to go till expiration. It's exactly our time frame here that we typically target, 40 to 50 days. For this spread, I'm going to go around a 20 or 25 delta option. So let's call it the 435 on the downside to put that into perspective. That's basically at the lows that we had in the August bloodbath of sorts. On the upside, we're going to go to the 485 here. We'll make it exactly 24 deltas on either side. To put that into perspective, it's near the top of the range of where we kind of bounced off of in this recent rally. And for this position, because I have so little capital being used, I'm going to put a little bit of extra risk on this position and go with a 15-point wide spread as opposed to my normal 10-point wide spread. So this pop in volatility has kind of led me to this decision as well, just because I want to get a wider spread to take advantage of more of that implied volatility that has been pumped into the market here in the last day or so. So on the downside, I would go to the 420 strike. On the upside, we would be looking at the even 500 strike. And so you'll see at about 45 days to go till expiration, decent IV rank, implied volatility at 25%, using somewhere around the 20 or 25 delta options, you're going to collect right around 1/3 the width of the strikes. I'm here at 482. It's a little bit less than 1/3 the width. I'm going to be using about $1,000 in buying power on this position, so it's a much bigger position. I would try to manage this at about a $100 winner, maybe $125 or $150 profit, depending on how quick that happens. But really just looking to get on some short premium here into a little bit of a pop in volatility and a dip in the market. So we're going to put this on. We'll see if we get filled here at 484. It's the mid price currently. If we don't get filled, we'll cancel and replace that order. We'll go down to 482 here. There we go. We got filled at 482 on this 15-point wide iron condor in the NASDAQ. The NASDAQ is up 200 points today. It's been very strong over the last couple weeks here and has tested my call side here. So if we go to the NASDAQ, QQQ, which is the NASDAQ ETF, you can see I'm right at the call spread here on the upside, the 485, 500 call spread. If we look at my order chains here, and this goes back a little while, so we have to adjust that to the 60-day. This goes back all the way to the beginning part of September. I did this at 482, currently marked at 644, which means I'm down $162 marked right now. So this position, the put spread is basically worthless. When we look to roll these positions, the position we're going to address first is the closer at the money spread. And that's because this spread will move much more in terms of value than this put spread. If the ETF or the stock were to drop $5 or $10, this put spread might go from what is a 9-cent debit to a 20-cent debit. Whereas a $5 or $10 up move for this spread is going to go from a $6 and change position to a $8, $9, $10 position. And so this spread will move a lot faster than that out of the money put spread. So when we're managing these positions, we're always doing the closer at the money position. So we're going to take this. We're going to buy back our spread that we're short. It's going to cost us a debit to do that. We could roll to the same strikes. We'll do this for a pretty decent credit here of $1.80. If you wanted to, you could adjust the strikes a little bit, lean a little bit less directional, go to something like the 490.505. You could go to the 495.510 if you really wanted to flatten out a little bit of delta. I think that's actually what I'm going to do here, because I'm going to do a roll and collect a credit on that roll as well. So I'm kind of massaging my deltas a little bit here, going from a position, and you can see I'm picking up long deltas here with this roll. I'm going with a position that's right at the money to a slightly out of the money position here. Not a ton, but a little bit. And you can see the big issue with iron condors and rolling iron condors, unlike a naked position, when you roll, you're actually going to temporarily use more buying power than you are using in the at the entry. And that's because you now, with this roll, I would have a call spread in this expiration and a put spread in this expiration. They both be margined. If you need to get rid of that, and you can only route up to four legs in a single transaction. If you're worried about that buying power expansion, or you don't have enough capital to make that transaction, what you would do first would be to buy back this put, the short put, which will take off that risk on that position for you to roll for a net no additional buying power. So it's not an issue for me here, so I'm just going to make the roll, and then we'll close out of the put spread. We'll do the put spread roll by itself, but if you need to, you buy back that short put and then roll the call spread in this situation. All right, so we're going to do this for a small debit. We're going to see if we get filled at this 34-cent debit. Let's move this to 36. There we go. So we got filled at a 36-cent debit. Now we're going to take our put spread and we're going to get back with this roll our $1,500 in buying power. It'll put us back to what we were at before. And so I'm leaning short about 20-ish deltas. So I'm trying to pick up maybe 10 deltas on this roll just so that I can lean a little bit directional, as opposed to flattening my delta out totally by going to an equal delta, 20-ish delta position. So I'm going to look at this 455 strike. It's right at about a 20 delta. And then I'm going to buy this 440 strike. So this will pick up about 7 deltas. It'll reduce my overall delta on the position about in half, because I'm short about 18 deltas, so a little bit a third between friends. Reducing a little bit of delta with this roll here. I'm going to do it at $1.50, depending on where we get filled here, which will give me a net total credit on this roll of somewhere around $1.20. Put me at like a $6 or $5.70-ish cent net credit on this position. So let's get filled here. Let's see if we get filled at 146. And you can see the buying power effect. I'm getting all that back, which I used on the initial roll of that call spread. There we go. We got filled at 153. Puts us at about a $6 credit here, $5.99. It's currently marked at $7.77, so I'm out 170 some odd dollars here. Just trying to manage this position, give myself a little bit more time to be right. And again, didn't add any additional risk to the position, actually reduced my overall risk because I collected more premium on that. So we'll see if that works over the next couple weeks. Just need a sideways move here. That would be perfect for this position. We are a little bit of a loser at this point in the trade. We've gotten a little bit of a pullback to pull up the table here and just look at where this position is. We're in November, 23 days to go till expiration. The call spread is now slightly out of the money. The stock, or the ETF, I should say, is down $4 and change. So it was right around 496 at the last close. So you have two options here. So you could take this position and roll out to December, which I don't hate the idea of doing. December, 58 days to go till expiration, certainly on the table. For me, with an iron condor type position, I tend to want to try and bail out of this position, meaning I want to get, basically a scratch or maybe a small profit on this trade and move on to a fresh position at some point in the next week or two. So for me to do that, I need to roll up this put spread, collect a little bit more premium, and hopefully get some more chop in this range through the next week or two. So I'm going to take this position rather than rolling it out in time. I'm going to take this position, this put spread, which hasn't really moved that much into this move. We can go to the change button here. It's moved about 15 cents, and I'm just ballparking that based on the change here. This long option has increased by 25 cents, which is a positive for this option. This option has increased by 43 cents, which is a negative against my position. Net, it's about a 15, 18 cent change. So not all that much. On the call side, this spread has moved almost $1.20-ish. So I've gained back about $100 today just on this move. A nice move for what I needed for this position. So now we'll change this back to delta. And so I do have about 20-ish deltas on the upside. So with this roll, I want to pick up like somewhere between 25 or 50% of a delta reduction. So I want to pick up 5 or 10 deltas. So this the delta of this position is about 5. If we roll up to like the 480, 465, that'll pick up a net of 8 long deltas. So this will put me, instead of being short 20 deltas or so on this position, I'll be short only about 10 deltas on this position. I'm going to collect a decent credit here of $1.93, which will put my basis in the overall position at almost $8 here, which will give us sort of an iron fly type risk profile here. I will have to hold this for a pretty decent amount of time if I do those strikes, which is fine. I'm fine with. I'm trying to get to a scratch on this trade. So we'll see if we can get $1.92 on this, and we'll see how our order chains look after that. So we'll adjust this to 190. You can see the market's rallying, which is going against my roll because my roll is a long delta roll as opposed to a short delta roll, there we go. So we got filled at $1.89. That puts our total credit at $7.88 here. We have a pretty tight range to hit between $4.80 and $4.95. Ideally, we get about a week or two of chop between these strikes. And this position, I probably won't be profitable on, but if I could get this down to like $8 and exit this for a scratch or a negligible amount of loss, that would be a home run for this position, especially because we put this trade on when the ETF was at 460. So hopefully we get that to work over the next week or two, see what happens, and we can always roll this out to December if we need to. And so this position is now basically a scratch. It's a small loser, 68-cent loser here. We're going to take this position into what was a gift of a move this morning, and we're going to close it out and roll into December, into a brand new position. So sometimes you get these positions where you've managed it, you've rolled, you've done all this stuff. This position was a $500, $600, $700 loser. I mean, we could look at just the price of the NASDAQ when we did this trade. We did it at 460. We had rolls at 487. We did rolls at 487 again. We had the roll out in time at 491. So stock the ETF has gone significantly higher. We can look at implied volatility as well. We've had a spike in implied volatility and then a little bit of a contraction here. You could see the implied volatility is now sitting at 27%. So we've had another pop in volatility. That'll help us a little bit. If we look at December, it's up to about 25-ish here. So this position, we've done all we could to get back to basically a scratch or a very small loss here. You certainly could sit with the position if you wanted to and take a little bit of risk into the November expiration. For me, I'm just looking to close this position, move on, and put something fresh on in December that's a little bit further out of the money, a little bit higher probability trade. So with an iron condor roll, so to speak, you have to close a position like this, or you could roll this as a spread. Let's actually do that. We're going to roll this as a spread. So we're going to take this 495, 510, We're going to roll out to December. Let's roll to the 500, and we'll go to the 515. You know what? Let's do it, but based on delta. So we'll go to the delta. We'll go to the 30-ish delta. So we'll say the 510, 525. So we'll do this for a small debit. This will cost us about $1 to do this. I'm hoping to roll the put spread for maybe around $1 or so in credit here. So we'll roll this for $1. It is going to use a little bit extra buying power because I'm rolling just 1/2 of the spread. So it is going to momentarily use a little bit of extra capital. I'm going to get that back on this roll, on the put roll. So we're going to lean a little bit more directional on the put. So we'll keep the put spread around a 30. We're going to lean a little bit long here into this dip. 475, 450. So this will net us a small credit. So we're going to lean a little bit long into this move. You'll see I get my some of my buying power back here on this move. So I'll be $15 wide on the upside, $15 on the downside. We're going to do this for a small net debit. Let's go to the, there we go. So we'll move this to the 470, 455, a little bit, tiny bit closer on the put side, a little bit more room to run on the upside. It's going to put us in this position basically at a $6 and change net credit, but it'll give us a little bit of a wider range to hit here. So we'll roll this for 43. We'll see if we can get 44.50, 44, 45. Come on. There we go. About to cancel replays. All right, so we're rolling this out to December. We're doing it for a net $1.50-ish debit. We've still got a total net credit on this position of 641. So it gives us about 1/3 the width of strikes, a little bit more than that. A little bit more than that. So the total on this through all the rolls, 461. We'll see if that works out over the next couple weeks here. 470, 510 is where our short strikes are. We've gotten back to a pretty decent profit here. I mean, considering the adjustments we've had to make, we started with the 485, 500 spread on the call side, 15 points wide, which was basically fully in the money up until Friday's sell-off, right? So $1,500 of value in that call side. Let's just call it a $500 or $600 loss at one point that we've battled back to a $100 win. These are the sort of trades that we look back on and we really get most of our value back from losing trades like this. It's trades that you turn from $500 or $600 losers into a scratch or maybe a small winner. Those are the biggest value changes to your portfolio versus the strangle that you put on for $2 and you make $100 on it and you close it and you were never tested and you move on to the next trade. Those trades you expect to happen. The trades like this where they're big losing positions that you turn into a scratch or a winning position are where you make most of your value back in trading. So this one, it's time to go on this trade. We've managed it. We've done good here. It's a great example of an iron condor management and how you can kind of turn a junky position into an okay position if you do get a little bit of a move in your favor here. So we're going to take the money and run here, as they say. So we'll start this at 531 and see if we get filled. We can work our way up from here. 533, 535. Oh, got filled as I was adjusting the order. That's awesome. All right, so we're out. $5.33 debit. We have rolled this position many, many times and exited for a $100 profit, a little bit over $108. So got the move that we needed ultimately, but some good management throughout the trade, and we got paid in the end. So that's a good little adjustments that we've made throughout the trade, and a nice little profit to end.